Since April has been a bit of a market shift, we've definitely moved a lot more into a derivatives. There's no volume, there's no Google Trends. It's like unbelievably dead quiet out there. Bot volume is like bear market level. What's going on? You're like, where is everyone? How on earth can we just be going up when there's no volume? The only other time I remember seeing this was the second all-time high in 2021. But the thing wants to go higher. No question about that. But what I think matters, and this is what I think a lot of people miss, and certainly I spend a lot of time trying to think.
Meet James Check, better known as Checkmatey on X. As one of the world's top Bitcoin on-chain analysts and the former lead at the renowned Glassnode, James has now launched his own brand, Checkonchain.
His mission? To educate investors on Bitcoin's market dynamics through insightful analysis and engaging content.
It's one thing for the price to go somewhere. It's another thing for it to stay there. 120, as you said, we could be much later in the game than a lot of people want to believe. If we go straight up from here, 175 is like, sub 3-4% of all history has ever been that high. And by the way, I think we might go fast paced. I think we're heading into that environment. Anyone who says there can't be a bear market is kidding themselves. Of course there could be a bear market.
Hey guys. I just wanted to let you know, I published a new book, The Bitcoin Enlightenment, co-written with my buddy Daniel and none other than Mexican billionaire Ricardo Salinas. It's a deep dive into the monetary system and its future. In it, we make the type of connections that go beyond what you'll hear from your average Bitcoiner, MMT advocate, or macro pundit. So grab your copy on Amazon today. You'll find the link in the show notes. And now, on to today's show. Hey guys, welcome back to Less Noise, More Signal. And also, I'm pleased to welcome back James on the show from Checkonchain. Cool to have you back, James.
Thanks, mate. Thanks for having me back on.
Yes, great. Yeah, it's very cool. It's always a challenge to make it work for you because you're in Australia and it seems like the end of the world for everyone, at least from our perspective. Maybe
it's the furthest away from most places. Yeah.
Yeah. But it's great. We make it work. So for me, it's early morning. For you, it's almost end of the day. But still, I mean, so much is going on. Obviously, happy all-time highs, and Bitcoin is ripping. And so, just wanted to get your feelings. How's everything going with you?
No, it's good. I mean, it's always good to see Bitcoin punch new all-time highs. And this one in particular, I mean, I was writing about it for a couple of weeks, being like, this chart just looks like it wants to go higher, right? You spend enough time around a price chart, you see the bull flag that it's painting, you're like, this thing wants to move. And then when it goes, it's like, it makes sense. You've got this coiled spring, and then when it pops, it's like, yeah, who's surprised? And the funny thing is that a lot of people were surprised because a lot of this move was a big short squeeze. And it's not like it wasn't easy to see. It was well telegraphed. There's a whole bunch of people who were saying, no, double top. And it just sliced straight through them like butter. So I love to see it.
Mm-hmm. Yes. Yeah, you were actually right. That's true. I mean, I have it on good authority, reading your newsletter. And I think some people were pointing it out on X as well, that you were on July 10th, you were saying, if Bitcoin doesn't break higher, I will eat my cold card, and maybe for people who are not familiar with a cold card is a hardware wallet, so to say. But in the end, we're all happy that you don't have to eat it and that Bitcoin is ripping higher to new all-time highs. But maybe people would be interested to know how come you were so sure and walk us through your thought process. You were mentioning you were looking at the charts. What were you looking at specifically?
Sure. Again, one of it is just, you spend enough time around price charts and you can see patterns. You're like, this thing looks like it wants to go higher. When I generally look at this whole cycle, and when I talk about this cycle, I mean like since 2023, it's just up, sideways, up, sideways, up, sideways. It's just beautiful stair stepping, very institutional, very stable, very serious price action. It's fantastic. It's exactly what you want to see for building robust floors on every level higher. Since April has been a bit of a market shift. We've definitely moved a lot more into a derivatives. They've got a much bigger involvement than they did prior to that. Up until April, I would say it's been very, very spot driven, both ETFs and just spot in general. But we've started to see that pivot point where people are now putting on a lot more leverage. We're starting to see like open interest is at 86 billion for futures. We're seeing a lot more open interest come into the market. Now, the thing that was surprising there, because you see open interest up and you're like, okay, there's a lot more levered people. Surely, given Bitcoin's at 110K, there's no way that people are going to be short, right? But funding rates were like 4%, 4.5%. And you look annualized and you look at this thing, you're like, it doesn't make sense for the Bitcoin for price to be like a fraction below all-time high. And yet the funding rates, you get more money to going and buying a US government T-bill. It doesn't make sense. The only rational sense, because like, how do you get a low funding rate? Are people doing a relative value trade? I mean, like there's no short Bitcoin, long anything else because it doesn't make sense. No matter which way you cut, I'm like, there just has to be shorts. There's too many shorts in the market. So you look at the price chart, you spend enough time around these things, you get familiar with them. And then I actually just did a deep dive and you can say there's a lot of people who are genuinely betting that this thing is a double top and they're massively short and their liquidation level is exactly above the all-time high. So you're like, well, I've got all these things pointing at saying like, I mean, wouldn't it just be artistic to just pop straight above 110? You hit one guy's stop loss, that liquidates the other guy, and it's just this cascade. Next thing you know, you're at 120K. So there was no kind of magic to the prediction aside from just experience being around markets. And, you kind of look through the data and you go, it just looks like we're going to teleport to 120. And here we are at 122. So happy days.
Yeah, that's crazy. Yeah, that's for sure. No, I mean it's always that you probably have these patterns, that you can sort of figure out. The thing that many people are asking themselves now is probably now that we are in price discovery mode, there aren't that many patterns you can follow,
Yes.
because it's sort of uncharted territory. No resistance levels, no nothing, no prior highs. So how can we think about where the price might be going now from here?
Oh, that's a great question. I've spent all day puzzling over that myself. So the piece that I've just finished writing before I jumped on here, I still have to do the final touches and send it out. But I was trying to answer exactly this question because you're right. Price discovery is a whole different animal. You don't have, previous levels to look at. And not that I actually use previous price levels that much. I like to, when I'm looking at the on-chain data, there is no on-chain data when you haven't been there. So the thing that I was actually looking at is volume. And the interesting thing about this all-time high, the piece is probably going to be called something like a very quiet all-time high because it's nothing. There's no volume. There's no Google Trends. It's like, it's unbelievably dead quiet out there. Spot volume is like bear market levels. What's going on? Where is everyone? The Bitcoin blockchain itself, there's like 2 blocks waiting to get mined. You're like, where is everyone? So this particular all-time high is a bit weird. So generally speaking, low volume is not a great sign, which is kind of interesting, right? Because we're at 122. The short squeeze has definitely done its job, getting rid of all those guys. But you've then got to ask yourself, like, do we have the demand to keep this thing going? And volume tends to be a slower moving type metric. So it's generally coincident or lagging. So market needs to go before volume follows. But at the same time, you don't want market up, volume down. And we have volume down in futures as well. Like it's not just spot. Futures markets are also very, very quiet. So it's a very strange all-time high. I don't recall seeing this before. I also don't actually recall seeing funding rates being like so negative right before a break to all-time highs. So it is strange. And as we look higher, we're still moving. In the time it took me to write the piece, we started at 119. I looked at it like I'm halfway through, it's 120. I'm still writing, it's 121. And by the time I've finished jumping on here, it's 122. So like, the thing wants to go higher. There's no question about that. But what I think matters, and this is what I think a lot of people miss, and certainly I spend a lot of time trying to think about, not that I can see it better than anyone else, but it is very easy to look at short-term price action and then extrapolate and say, oh, we're going higher. It's one thing for the price to go somewhere. It's another thing for it to stay there. And that's what's been a big feature of this particular market cycle. We have gone up and then we've stayed up. Yeah, we've had corrections, we've had pullbacks, we've had chop solidations, whatever you want to call it, but we've stayed there. In 2024, we went sideways for 8 months. In 2025, we went down to 75, but really we chopped between like 90 and 100 for 6 months. As we go higher and higher, it's going to become harder to stay there. And I think that's the key dynamic. We need more and more and more capital to keep us at 120 and 130 and 140 and 150. Can we get there? Absolutely. But it's just going to require a new pool of capital to come in, and that can happen. But these things take time to develop and build up. So it's uncharted territory, but it's fascinating. And that's what we're all here for, because we literally don't know what Bitcoin's worth. No one does. And that's great.
Yeah, that's for sure. And that's greatly said. I mean, to me, it's just like, obviously when the price goes through all-time high, and it rips to new all-time highs almost every hour. I mean, you get these moon boys, who really cheer for Bitcoin to go ever higher. And so if that what makes me skeptical as well. But at the same time, I have these like credible people that I follow, on X, like, I don't know, Jody Visser, Richard Byworth, Jeff Park, like people that I really admire because they share a lot of alpha, and they have been going on record, saying like Bitcoin, you will be surprised this year how high it will go, 200K. And so I'm like sort of torn, because like I feel they know what they're talking about. At the same time, I'm like, Bitcoin at 200K, that's so high in such a short time frame, by the end of the year. Because reading your newsletter, you also sort of look at where people are really in profit, and then you sort of extrapolate and say, okay, at this price level, we might be at a really overheated condition. So yeah, I'm just really wondering, how to deal with these types of calls, obviously,
Sure.
because
I mean, for me, the answer is that no one knows. Just accept that no one actually knows. I'm bull, right? Bitcoin's like most of my net worth. So I'm like as bullish as you get. My whole business is Bitcoin. I pivoted my career into Bitcoin. So yeah, I'm gig along Bitcoin. But in order to get to 200, you got to get through 120 first. We're there. But now we got to get to 130 and 40 and 50. And it's one thing to get there. It's another thing to stay there. So I think in many ways, because you're dead right, this is a real thing. And this is actually why I use Check the Analyst and Check the Hodler. So when I was writing my piece today, the truth is there was a little bit of a bearish tilt to it. Not that I'm a bear, but I'm just saying, like, how on earth can we just be going up when there's no volume? The only other time I remember seeing this was the second all-time high in 2021. And again, that doesn't mean that this is going to play out the same way, but like, you need follow through, because otherwise you're trading through air, and you're going to trade like it's air on the way back down. So there's a whole lot of elements here. And like, Check the Analyst is looking at this thing being like, I have to be very objective. My job is, and when I write the newsletter, my job is actually, because everyone's very excited about all-time high. Even my co-founder, Alec, when he read the piece, he's like, man, like, you really like dampened my high a little bit. I'm like, I know, but that's my job, because nobody is looking at what it might mean if it actually doesn't have legs. So my job is actually to look in those uncomfortable places and then check the hodler. He's long, he's bullish, he's excited, he's keen, like it's all-time high, let's go. But I now need to like check the hodler, which is actually me. All right, Check the Analyst is my professional persona. Check the hodler needs to work out what's he going to do. And, honestly, he's going to do the same as what he's currently doing, which is nothing in DCA. He's going to just keep doing the same thing. So it really, for him, the bearish tilt doesn't change anything, because all I'm not going to do is, until I see that volume kick in, until I feel a bit more confident, I'm certainly not going to go putting on any levered positions or making any kind of like, I'm probably not going to go out on the risk curve until I see that the market is stabilized. I'll just keep doing what I'm doing, humbly stacking SAD. So that's really the framework, right? Everyone's going to have a call. Everyone's going to have an opinion. No one actually knows the future. Work out what matters to you on what time frame. Almost always, when you see that disconnect, it's about on what time frame. If we're talking about this year, 200K in 6 months is a big move. That's a big move, right? That's a doubling of Bitcoin's market cap. Could it happen? Absolutely. Is it likely to happen? Very improbable. Could it? Maybe, probably not. So in 5 years' time, I mean, yeah, absolutely. We're going to be well and truly through that level. But in the next 6 months, it's harder to call that.
This show is brought to you by NewHedge. In a market driven by complexity, insight is everything. NewHedge is a dedicated Bitcoin analytics and intelligence platform delivering cutting-edge analysis, on-chain metrics, and real-time market data. With 200 plus proprietary indicators, live derivatives data, and adoption metrics, NewHedge provides the depth and precision that serious market participants demand. Backed by some of Bitcoin's most prolific investors, NewHedge connects traditional finance with Bitcoin's evolving landscape. Gain your data edge today. Sign up for free now at newhedge.io and get 50% off your advanced subscription with the code SIGNAL. Yeah, no, that's for sure. I mean, the question, because I'm asking this question, is really because, having been in Bitcoin for plus 9 years now with some of my friends as well. I mean, in prior bull markets, everyone was like, okay, it's too early to sell. It was this
Sure.
100K magic number as well. And now we've gone past it. And a lot of people, like, of my friends especially, they have made significant amounts of wealth, and they're like, oh, now, okay, maybe I want to scale out a little bit to maybe potentially also go back in lower, but once we really hit another bear market, and so they are wondering, okay, yeah, how do I go about it? I don't just want to blindly, obviously, sell, but maybe once we're past 120 now, or 125 or 130. Okay, it might start making sense just because of the things that we're seeing around us as well. You've pointed it out, like volume being down, and not only in the last few days, I guess, since the start of the year. We've seen it steadily declining, and then you pointed this out as well. The blockchain is sort of empty. Nobody's really there's a ghost town, and so these are all sort of things where it points to a late stage that we might be in this bull market. So yeah, I feel that's really what I now see. People, it's becoming tangible. They really want to do something about it. They also feel like they've been in cycles long enough that they want to try something like this. And so that's really, it's not just talk anymore. It's becoming concrete. And that's what I find so
There's a
fascinating.
funny thing. I mean, every hodler we all go through a very similar journey, right? The first cycle, you buy the top and then you get wrecked, but you're like, there's something about this thing I'm going to keep buying. And you learn about it, you're like, oh, yes, I was right. I got to keep buying this thing. And then you go ham. And then the second cycle, you generally make a bunch of the same mistakes, but you're better. You probably don't buy the absolute top, but you still weather the bear market. You still bought high and you still got to go through the bear. And then once you get to your third cycle, you're now and you've been buying through the bears. And that's the thing. The accumulation through the bear markets is what changes everything. Because if you're buying the bulls, it's all well and good. But if you're buying in the bears, you're getting depressed prices and they go for a long time at those depressed prices. So that's where people actually build a meaningful Bitcoin reserve. Now that in Aussie dollars, we're at $180,000. Like these numbers are just, they're massive, right? And you kind of look at this thing, it's like, in most people could sell one coin and actually go and change their life in a very, very meaningful way. 112 grand, 120 grand is a massive amount for anyone really in the real world. But at the same time, I know if I leave it in Bitcoin, it's going to be fine in the long term for my long-term savings. And that's where it really comes down to like knowing who you bought what coin for, because you can actually have some coins that are not for. Like I've got coins that are for my kids. It's got nothing to do with me. And like, that's the whole runway. They're going to go their whole life. There's also some coins where like, at some point I want to improve my life and maybe the lending products are there. Maybe they're not. I'll work that out when it comes. But for now, like for me personally, for Check the Hodl, I'm just in buy mode. I don't care. Like at this point in time, the number isn't big enough for me to like really change a great deal. I don't need it at this point in time either, right? Income is still steady. So find your own kind of zen. And I'm a big advocate for, if you do plan to sell a little bit, by the way, there's nothing wrong with that. Do whatever you want with your savings. It's what it's there for. But have your plan thought out, written down, and concrete before this market starts moving, because people are going to start trying to make a plan now. And that's much harder, because now we're at 120. They're going to say, oh, but when it gets to 150 or when it gets to 200, 120, as you said, we could be much later in the game than a lot of people want to believe. That is a very, very real possibility that everyone should consider. So if you start making your plan at 120, 125 could be it. I don't know. It could be, but like people are very easy to benchmark against the latest price tick. And the truth is, you should probably be benchmarking to 100K and really to 75, because that's the two levels where we built very serious support. And by the way, that's the other good thing. We actually have really, really serious support at 100K and really serious support at 75. No one really wants to see it go down to 75, but if 120 happens to be the top and we go down to 75, that's a pretty good bear market by Bitcoin standards. And then that springboards onto the next level. So I think the main thing really at the end of the day, what am I trying to impress? Be ready for anything. Do not allow the moon boys or the doom boys to tell you what the answer is going to be, because none of them know. None of us know. We're all guessing, but we try to use the most educated guess that we can and build your models and frameworks and whatever to just trust your own instinct. And don't let anyone else make your plan. Make your plan yourself, write it down and stick to it.
Yeah, that's a very important observation. One little like piece of evidence or anecdotal evidence that I might want to add here is, when it comes to this concrete cycle, also, as you said, everyone has his feeling, and I feel like maybe I'm not that good with charts. I have people like you that I can follow and others, but at least I got some gut feeling as well when it comes to like what the market seems to be feeling like, and one great observation or thing that I'm seeing is really the hype about these Bitcoin treasury companies, and it's now sort of the talk of the town that one will be started in every country. And obviously now in Switzerland, everyone is looking at it. And people are starting to contact me out of Germany, out of Switzerland, because I'm sort of around here, somewhat of a Bitcoin influencer, somewhat of an expert, and they're asking me if I want to join as a partner, as an advisor. And I'm like, dude, I have zero sort of experience in that. I'm just like a guy who knows something about Bitcoin and maybe can talk to some people. But this then to me is sort of anecdotal evidence, that we might be in this later stage when it comes to these, because if they ask me for advice, it's like, well, you wouldn't do this in a normal market cycle, but now that maybe everything is really excited about these companies, and that's then again for me sort of the, as I said, anecdotal evidence that we really might be at the late stage when it comes to these Bitcoin treasury companies, and then maybe also extended when it comes to Bitcoin itself. So
Fully
that's
agree.
just
I mean, I've had, I think 3 or 4 people reach out and be like, "Hey, can you be like the front man of my treasury company?" I'm already the front man of a treasury company. Checkonchain is a Bitcoin treasury company. We just buy Bitcoin, right? Like, I don't need 2 of those roles. And no, I've worked for someone else my whole life. Now I work for myself. So yes, I think that's all very relevant. And again, here's the other thing that's really important to know. At this point in the bull cycle, I do believe we've stepped into the euphoric phase. This is where stuff gets unhinged and it can get way more insane. It can get way more insane. But I've also done a lot of thinking. Again, the treasury company is fascinating. I can't pretend that I've solved the answer. I don't know how this plays out, but I've thought about this quite a bit. And my base case is I do not think we need one in every country. I just don't think there's actually a demand for this. I also think that there's a lot of companies that are going to be a Bitcoin treasury company. And what that actually means is I'm going to run my operational business and just sweep coin spare cash. I just don't think there's room in the world for too many strategies. Right? Strategy is its own thing. Metaplanets, they've really hit some kind of meaningful velocity, I believe. They've also got the advantage of the Japanese market. I'm an Australian. I have really, honestly, zero interest in buying an Australian treasury company. I don't care. I can buy strategy. I don't actually need to buy an Australian one because you know why? There is zero advantage in Australia because our capital markets are shit. We literally build houses and we dig stuff out of the ground. That's all we do. We really don't have an advanced capital market. Even on my superannuation, right, which is our 401k equivalent, I have zero restrictions or challenges buying international equity. So I'm just not convinced that this is anything other than like a retail hype thing.
yes, exactly.
It'll have its phase, and that doesn't mean that this isn't going to, do very well for some people, but there's going to be a lot of folks who buy these things at ridiculous premiums and they just get squashed. I can construct a 95% bear market in so many of those companies. Can't do it with Bitcoin. That's a hard sell.
Yeah, no, but I have a similar feeling when it comes to Switzerland. Exactly, I can only speak for Switzerland, but here again, like we have such a developed Bitcoin market, maybe one of the most advanced. We had ETFs or ETPs really early on. We have banks nowadays. Almost at not at every bank, but at so many banks, you can actually buy Bitcoin. Even spot Bitcoin and stuff, and so you don't have no capital gains tax on Bitcoin, nothing. So it doesn't make sense to me. There's no moat if you are sort of a Bitcoin treasury company. Why would you want to go for this except for any sort of hype, that you're seeing that's going on there. So yeah, that's for sure, and I think that's what people really have to have in the back of their mind. But
Checks
when
out.
it comes to the potential bear market, I mean, that's a question that I'm getting as well. Like, so, okay, will there ever be a bear market? You spoke of this job consolidation, then a staircase up, and then we have this consolidation again. Isn't that pointing to that there won't be that bear market anymore that we had in the past? Or how do you think about Bitcoin going forward in 2026 and beyond?
Yeah, I mean, anyone who says there can't be a bear market is kidding themselves. Of course there could be a bear market. And there's a couple of lines I use to try and illustrate this, but I think the first one that's really relevant is the bull market will author the bear that follows. So if you have a bull market where we just like teleport to $1 million, strap in because we're probably going down 80%. I can easily construct it down 80, down 90 from that kind of thing down to 100K. I can see that happening. If, on the other hand, we have this slow, steady grind, I mentioned before, we built support at 75, built support at 100. I struggle to see a world where we go below 75 on any meaningful time frame. So I think we've kind of proven that we're a $1 trillion asset now. So then we went to a 2 trillion, and we've just proven that we're a 2 trillion asset. Now the question is how many trillions? And what will eventually happen is we will put too many trillions into the market cap, and then we will have to take some back because that's just how markets work. If anyone can find me a price chart that is just green candles forever, I'd love to see it because I don't think they exist. So Bitcoin will absolutely have a bear. So what the real question is from where and how far down? And that's, I mean, at the end of the day, no one can really predict that in advance. If we at the moment, 75K is where like a lot of my models, and these things are moving targets because as demand comes in, we lift the floor. And as the floor lifts, we've said, okay, we've proven that 100K is now a level and these things will move. But 75 is like, the odds of us staying up there are slim. By the time we get there, might be 180, could be 190, could be 200, TBC. But as it stands, if we shoot straight up from here, and all of these things are instantaneous because they're moving targets, if we go straight up from here, 175 is like, sub 3-4% of all history has ever been that high. If we take the next 6 months to get to 150, and then maybe we get to 175 like mid next year, those levels could be up in 200, 250, something like that, because we've allowed that capital to come in, we've reestablished those floors. So hold that thought. The chop solidations that I mentioned before, specifically 2024 is the best example of it by far. But you could also argue 2025, that 100K zone. Both of those regions, huge amounts of coin change hands, massive amounts of sell side pressure, and the ETFs just hoovered them up. Strategy hoovered them up. Investors just kept absorbing this supply. So we had a huge amount of sell side, but the market absorbed it. And that builds this confidence. And we go, you know what? We actually belong here. And I think that's what this whole process is about. Stair-stepping price action is very, very stable because it allows investors to be like, you know what? 100K kind of feels normal now. Could you imagine telling yourself that a year ago, that 100K would feel normal? In fact, 100K right now probably feels cheap. What a crazy thing to think about. So that's really the way to contemplate this stuff. The slower and the more stable we climb, the harder it is to construct a really deep bear market. But the sharper and the faster and the more leverage and the more vertical things get, the easier it is to construct a meaningful down move.
Yeah, that's a great way to look at it. I mean, that's something that you helped me understand as well, like really these sort of, if it takes time, and everyone speaks of this, consolidation is good because it builds a better floor. But exactly when it comes to all these metrics, they can really start to catch up and then also kind of digest the entire move. And then the moving averages and stuff can really move higher. And that's really where it clicked for me and makes sense. Yeah. It makes
and markets
really
are mean reverting. So what we're doing is we're actually, the market's giving time for those means to come up. And if you've got a higher mean, then to get to 1, 2, 3 standard deviations away from it, it's higher. So that's exactly the way to think about it. And in a way, those chop solidation periods, they actually have this they've got the genetics of a bear. They actually have this micro bear market structure. Even though they only went down 30%, that chop solidation period in 2024, it kind of felt like a bear market. And across a lot of metrics, it was right on the cusp of being a bear. And the cool thing about that is that what happens in bears? We build floors. That's what actually happens in a bear. Only the hardcore remain. Those who are going to sell and take profit or loss, they get flushed out of the market. And you're just left with hodlers. So in a way, that 75K zone, we actually had a bit of a bear market. So should we start the cycle from there? Maybe. Isn't that going to break everybody's head? What if the cycle bottom was actually September to whatever it was? I think it was when the yen carry trade blew up. We got to 49K.
Yeah, August,
what if that's the new
exactly,
cycle low?
Yeah. No, I see. No, it makes a lot of sense. I mean, the question that I always have in terms of the question, when it comes to bear markets, I mean, there's always some signs that you can point to that also sort of foreshadow maybe a future bear market. And you had this post, about um, the borrowing. That's also the talk of the town that I see at the bank that we're working. Like when I go somewhere and I tell people I work at a bank with Bitcoin, they're always asking me, can I borrow against my Bitcoin at the bank? And then in Prague at the conference, there were also so many like companies, Firefish and whatnot that are sort of offering this nowadays. And then in this post, it's again anecdotal, but we saw that a lot of people say, take out a loan, 120K to buy more Bitcoin and stuff like this. And so I don't know what the sort of thoughts you have on this. And then my follow-up question would be, I do have Bitcoins as well, my friends as well, and they're obviously saying, well, now might not be the best time, but I'm looking for a more fair value of Bitcoin to maybe then, at the bear market bottom or floor, to then try to lend again or borrow against it. And so, but these are two different questions. Maybe the first, just what is your feeling borrowing
Yeah,
against
totally.
Bitcoin right now?
No, yeah, you're dead right to look at these things as signals. And I think this is the challenge of markets, is that all these things happen late stage. Very rarely do you get a phone call at $20,000 Bitcoin after FTX has imploded saying, hey, where do I lever up and borrow against my Bitcoin? You only hear about it at 110, 120. So that's just people becoming more confident that the bull is here to stay. That also doesn't mean that the bull is over. People will generally have, like, this is about the right time where people start to lever up. And what happens is we start moving higher and people get so FOMO driven that they go and make silly decisions and they lever up too much. This is the last time I'm going to be able to buy this this price. And next thing you know, it's lower. And then they're in a world of trouble. So you're right to spot that as like an anecdotal, it's later stage stuff. It's not early bull. Doesn't mean it's the end, but it also means it's probably, getting longer in the tooth. So that's the first thing. Second thing, I think the lending against your Bitcoin is absolutely going to be a product. Like, there is zero question. If I look at it from my perspective, I mentioned before, like, Bitcoin is my net worth. It's the asset that I have. It's the thing that I want to hold. So why wouldn't I use that as my collateral? Now, I've done some very cursory looking at, what kind of products are out there. Generally speaking, a lot of them are fairly early. They're 12-month loans. They're, 15%, 12%, something like that. So they're expensive. They're short dated, they're kind of geared towards the borrow, buy Bitcoin, hope Bitcoin go up, sell Bitcoin, clear loan, keep some of that Bitcoin. That's really what they're designed to do. And I think a lot of people are going to use them as such. For me, that's actually not what I want to do with it. I actually don't want to borrow against my Bitcoin to buy more Bitcoin. I want to borrow against my Bitcoin to buy a house. That's actually what I want to do, because I've got all this collateral and I really don't want to sell it. And if I don't have to sell it, I'm going to sit on it, because that's what I'm going to do. I'm going to wait out this housing Ponzi. So in that regard, it's actually not the product for me. And I think that's the other thing, is like, everybody needs to just go through nobody on Twitter can tell you what the best setup is for you. You've got to work out what is your goal. And I think it's such an important thing that too many people don't do. They just think, I'm going to buy a bunch of Bitcoin. It's going to go up in price. And then they go, oh, wow, it went up in price. What do I do with this? But the most important thing is to think about what's your goal. For me, it's my long-term savings. I would like to buy a house with it eventually, and I want to put my kids through a good school. That's as far as I've thought about it, but that's my plan. So, do I want to sell and try and buy back lower? No, because that doesn't fit into my plan. That doesn't help me with my plan. My plan is to do nothing and buy more until I need my savings for one of those very important life goals. Otherwise, I just keep stacking sats.
No, makes sense. Yeah, and I mean, as you said, there are these solutions popping up, and I can only again speak for Switzerland, but I mean, over here, there's like, with the banks that are already in the space, they're all looking at this, and I mean, we're also going to have like really comparatively interesting sort of options there, because the Swiss franc, it doesn't pay any yield. You might have are also able to borrow just way cheaper when it comes to interest rates. So that's going to be interesting. But I mean, again, for me, it wouldn't be the time to do something like this right now. I just wouldn't feel comfortable, seeing Bitcoin price that high. But then again, I have this sort of model or thought that I want to assess the fair value of Bitcoin, and to me, it feels like Bitcoin is most of the time, it's sort of naturally overvalued, because of its bullish outlook, its underpinning, its number go up technology. It's perfectly right to be sort of have a bullish long bias. As you said yourself, I have my stack that I will never sell, But then sometimes there are these times where this sort of long bias quickly evaporates for a few weeks, months, and that's where the fair value is then at for me. And so my question is really how to figure this out. What would be some good bear market bottom indicators that you might be looking at as well to figure this out?
Yes, no, this is a great question, and this is the fun stuff, right? Let's actually look under the hood and say, like, and I often describe this. What do you expect to see? And I'll ask you this question: what do you expect to see at the top? Like, if you were to profile the average holder who's bought in the last, 2 months, who do you reckon they're going to be at the top?
Yeah, yeah, probably a lot of my colleagues who are not in Bitcoin usually, who don't hold, so the short-term holders, they're going to have,
Speculators. Yeah.
the
Yeah.
speculators.
People who've been like holding off calling on the phone because they're embarrassed, and it finally gets to a price like, all right, I can't do it anymore. I got to buy some. So you get like
Yeah.
people who actually have no idea what they're doing, right? Folks who really do think it's just
Uh,
like get rich quick. So that's like your predominant at the top. So now flip that around. Who is left at the bottom? It's only us. There's no one left. So how do you determine when the market has reached a point where there's just none of those speculators left? They're gone. There are no sellers. The only people who are left are serious hardcore.
the
I'm not going anywhere. This thing makes more sense than anything bulls. So the best way to flush the people out, there's 2 key mechanisms that markets wipe people out. 3, if you want to add one's kind of a bonus, spicy sauce. There is duration. So bears just go on for a long time and it bores people to death. So there's boredom. That shakes a lot of people out, usually after. So that's the second way. The first way is just down, red price action, red candles. The lower it goes, the more that people bought the top, they just watch their portfolio get redder and redder. And eventually they go, I'm done. I can't do this anymore. I can't stand it. I'm out. Bitcoin sucks. I'm never seeing buying this thing again. They sell everything. What I look for is you look for the unrealized loss. Unrealized loss, and we can see it because we can see when all the coins move. Lots and lots of coins move at the top when all those speculators come rushing in. Price falls away from them, but they keep being told, they listen to podcasts, I'm going to hodl, I'm going to hodl, I'm going to hodl. And then eventually they go, I can't hodl anymore. This is too much. I'm done. They sell everything. So you look for when their unrealized losses get so bad that the only people who've ever withheld that kind of damage is you and me. People who've been around this market long enough, they've been through a couple of bear cycles. And what you also see is those people start coming in to buy the bottom. So, you can look at all different ways. There's MVRVs, there's unrealized loss. There's all sorts of stuff we can look at. There's capitulation at the bottom. It's funny. You can actually see people who bought the top, they hodl for like a year, and then they all sell the same day. They all just puke everything out, realize losses go through the roof, and you're like, that's a pretty good sign. So you can combine it with market factors. You can look at it in terms of pricing models. There's all sorts of ways you can do it, but really what you're looking for is show me pain. Show me the kind of pain that only hodlers are still here. Everyone else is a tourist, they're gone. And that's a time thing, that's a depth thing. There's all these different components to it, but the cool thing about it is we can see it. We can actually visualize those points of pain.
Yeah, exactly, because that's what I think is so important. Because to your first point, when you said all the speculators, maybe the people who are not in Bitcoin. I mean, if I want to counteract this or sort of have an argument against it, I mean, a lot of people are currently pointing to Google Trends and stuff and saying, look, the retailers and the people who are usually not in Bitcoin, the speculators, they're nowhere to be found, And I have a similar thing. I mean, I don't have that many friends nowadays calling me up and asking me about Bitcoin. That was maybe 5 years ago was different, And maybe it's because Bitcoin is now at a price where they genuinely think like, okay, this train has really sailed or has this boat has really sailed, and I can't afford an entire Bitcoin. And so it's sort of their way of coping with it, just not talk about it anymore.
I think that's a very real thing, yes.
Yeah, exactly. But in the data, you can see it. Like if there is really unrealized loss, then you can actually see or if there is like realized losses as well and stuff, you can see it. Okay, now these people have been flushed out because they are around. It's just maybe not your neighbor anymore, who's calling you
Exactly.
up. So
And that's the
Yeah.
other thing, like, a lot of people on Twitter find it confusing that people sell. And like, I'm not, right? I just look at them selling. It's like, it just happens. It just is. So a lot of people just don't believe it because they can't put themselves in the shoes of somebody else of saying like, what if it's not me? Maybe if we get to this price, we go to 150, for example, we're not overheated, but we're pretty close. Like we're pretty steamy. I'm not selling at 150, but there's a guy out there who's absolutely going to sell without question. Because I mean, technically speaking, every price is a buy and a sell, but there's some dude out there who's going to sell. That's just how it is. We'll see it play out. I can model out and say, I think that's probably the price range where they're going to start doing it. But then I have to confirm because we mentioned the low volume that's going on right now. What's the other side of that equation? People aren't selling either. Like people have just taken their foot off the brakes and they're like, no way, give me a higher price. And, we're going to keep going higher until we find that next pocket of supply where people go, all right, that's my level. Now I'm going to start getting out. So markets are a process and it keeps it interesting. It's ever dynamic.
Yeah, that's true. That's exactly true. Well, I want to turn to this last topic, just quickly because it's maybe zooming out a little bit, but you just said it yourself. You have these Bitcoiners really asking the question all the time: Why is the price not moving? Why are there any sellers? It doesn't make sense. But obviously, I mean, yeah, everyone has their own thoughts when it comes to Bitcoin, and I increasingly find myself at odds with some of the like typical Bitcoiners, who just want to see the fiat system burn, and you had a tweet as well. I was discussing it with Michael Howell just recently, that this whole episode of Jerome Powell bashing, where they're all going against the Federal Reserve and they're even just cheering for it, like, yeah, it's going to happen, interest rates are going to come down. That's great, and so like, this is really, as you said it yourself, emerging market behavior. It really points to the fact that legal certainty, the rule of law, it might be really, dissolving here, and it's not something that you actually want to see. If you're a person in real life, so to say. And so I'd like to ask you, where do you believe? Is there going to be in the future, 5 to 10 years from now? Coexistence of fiat and Bitcoin, or how do you think about this? It's probably not going to be hyper Bitcoinization, and whole of fiat is gonna be
Yeah.
gone.
So I come at this problem. I think it's a very interesting problem. And I would obviously love it to be a hyper Bitcoinized world. I do not factor that in it's not my base case. I don't think that's how it plays out. Not because that's not the world I want to see, because I just don't think that's how it plays out. And there's a few elements to it. I think the rise of stablecoins is very interesting because the market chose those, right? We didn't force the market didn't force stablecoins on people, adopted it freely. They chose a dollar stablecoin. They didn't choose a euro. They didn't choose a yen. They didn't choose a pound. They chose the US dollar. So it's just an example of the euro dollar dominance doing its thing. The market demands dollars. I also believe that the average person, as a Bitcoiner, we all know this experience all too well. I would doubt there's a single Bitcoiner listening to this podcast who hasn't had the same experience of you've probably got like 5 friends you've convinced, if you're lucky. The vast majority is if we've got to go on the internet or to Bitcoin meetups to actually find any individuals out there who understand this thing. Despite the fact that the price keeps telling us that we're not wrong, the whole world keeps telling us that we're wrong over and over and over again. So people just don't like change. Now, I also look at things like, Argentina or Venezuela or, choose your hyperinflating currency. People just still, yes, eventually they start to switch. They all, like, inflation is terrible, but people still cling to it because they also don't want change. So the average person can take a huge amount of pain. The government doesn't want to let go of their printing machine, and the market continues to choose fiat currency time and time again. None of these things are good. They just are. So I come at it from that perspective and say, eventually, maybe in a very, very long-term time horizon, we move back to a sound money standard. Despite the fact that the sound money standard is a good decision and the correct design decision, the scope and scale of what it's going to take to go from A to B is monumental. And I just don't think, that is, we are going to go to 250K in 6 months, much sooner than we're going to see the fiat system crumble and collapse and disappear. And on the other side of it, no one wants to see that. As much as we love it, the number go up and Bitcoin going up is good. The fiat system collapsing is a horrible scenario that none of us actually want to live through. It's really bad, actually. So I think there's just, again, it's put yourself in the shoes of the other person. You actually don't want the fiat system to collapse. It's kind of funny. The most bearish thing in the world for Bitcoin is actually the best thing in the world for the world, which is fiscally responsible governments. That is the bear case of Bitcoin. It's not happening, but if it did happen, the world would actually be in a better place because that is a sounder money standard. Yeah, it's still fiat, but and yes, we'll be here in however long it takes for them to push the button again. But that's the way I think about it. So look, there'll be like markets. There'll be periods where we go up and down. And in a way, Bitcoin's price is reflecting that transition. There's periods where it goes up and there's periods where it pulls back and the dollar comes back and asserts its dominance. And then Bitcoin does its thing again 2 years later. And I just think it's going to come in these different sequences and swings.
Yeah, no, that's a great way to frame it as well. Yeah, maybe my last question, just in general, what do you think then are some of the most pressing blind spots that your typical Bitcoiner has? Apart from maybe, as you said, like let fiat burn, any other things that come to mind? Maybe that you have
if you can
encountered as
believe
well.
it, patience. Patience. This seems to be something that a lot of Bitcoiners, certainly on Twitter, just don't seem to have. Like, this market cycle, I've heard so many iterations of it. Like, it's suppressed, it's manipulated, it sucks. Like, this cycle's, it's no fun. This cycle is awesome. We've barely had a 30% correction. We've only had twice. It was barely 30%. And the market just goes straight up. Yes, it takes longer. And that's actually a big change this cycle. If you go back to 2017, the corrections took like 30 days at most. Like if you go away for a month, you go on a vacation, you come back, the price is like twice as high as where you left. You missed a whole 50% correction. Now, you've still got 7 months ahead of you where it's going nowhere. So I think this like boredom thing is killing people, but we're not getting the drawdown. And I've been using this story that like my old man, my dad, he bought in 2020. He rode the way up, he rode the way down, and he told me about it over and over and over again. Like, when's the number going to go up again? Didn't enjoy that. Now he loves it. He loves it. Like, number go up is his favorite line right now because we just keep grinding higher. So for him, he's become acclimatized to this like lower volatility profile. He feels much safer to allocate meaningful capital to it now. He sold coins lower to like get his money back, get his cost basis out. Now he's looking to buy again. That's how bullish this price action is that, boomer parents are now saying, you know what? I would actually like to buy more. I think this thing makes sense. That's where we're at. And I think a lot of Bitcoiners have just been very, they've been waiting for the high octane 2017 parabola and they haven't got it yet. That's okay. This market kicks ass. This is great. This is exactly the kind of price action you want because it's much harder to go much lower when you've got this kind of price action. It's good.
Yeah, exactly. As you said, it's always this, be careful what you wish for, because like if everything is that fast paced again, maybe, we don't build the floors, as we said, that we really
And by
need
the
to
way,
go higher.
I think we might go fast paced. I think we're heading into that environment. And what I think we're going to learn is that it's not fun on the hairy back on the other side of it. So, enjoy it while it lasts because I think we're going to get that event. It's just going to suck on the other side. You're going to remind yourself, that's why we don't like that.
Yeah, exactly. That's a good note to end on. So, James, thanks a lot for doing this again. And just enjoy the rest of your day. And
Thank you, mate.
see
Thanks
you
for having me
around.
on. Always a pleasure.
Great. Bye.